Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Welcome, ladies and gentlemen. Today we again will take a look at the euro currency, because the situation on the euro currency right now is very interesting, and in fact the euro currency right now stands in the center of the geopolitical turmoil, and in general it's very significant currency pair in the global FX market. So and right now the situation here is also very interesting, even from the technical point of view. Also, guys, currently I'm strongly suggest you to read our weekly research, because most informative charts and data stand on higher time frames. On monthly, on weekly charts, there are already significant patterns have been formed, significant levels have been passed by the price action, and this pushes us to some conclusion concerning the perspective of the euro currency in the medium term period. Shortly speaking, we suggest that market really could continue move lower to the 30-50 area, approximately 30-60, 30-50 area. But that will be in the medium term. Right now, in the short-term perspective, we wouldn't take the long position here, and we wouldn't get the short position here. We wouldn't sell with the circumstances that market stands right now. So take a look. That market right now stands at the monthly pivot support 1. It has completed this big A, B, C top D pattern, and simultaneously market has hit the daily oversold. Also, guys, I will open you a secret, so if you will be too lazy to read the weekly research, I also tell you that here is weekly confidence support right in this area. So market stands at rock hard support, and some respect of this area should follow. That's why we should avoid to take the short position right now here. Whatever bearish market is, currently it's not time to take the short position. Only after some bounce will happen. And right now the major task is to estimate the target of this possible bounce. Among the other patterns that we have here, guys, we also have the stretch pattern, because market has hit the daily oversold right at the confidence support. Okay, and the minimum target of the stretch pattern suggests the action to the bound to the middle between the overbought and oversold bands. Okay, and that's approximately an area of 134 area. It's very close to the 3.8 resistance of that recent thrust down. Okay, that's the minimum target that probably should be reached. But we should not forget that market, besides the daily patterns, besides this oversold condition and weekly monthly pivot support 1, market also stands at weekly confidence support and agreement. And it seems that respect of this support probably should be a bit greater and more visible, more sizable. And that's why the second target that we also will be watch for is an area between 134.75 level and 135.15, because you can see this is really tremendous resistance cluster that includes broken yearly pivot point, monthly pivot point, daily confidence resistance 135.15 area, and take a look, daily overbought. So it's not really the curious thing when the market moves from the oversold right to overbought, because the reaction is equal to the counter reaction. That's what often happens when the market moves in a right from the oversold to overbought condition. That's possible, especially when you have the right at the back the weekly confidence support. But anyway, this will be the first level to watch for. What conclusion we could make based on the daily time frame? First, the major conclusion is do not take the short position. Second, if you want to take the short position, wait when the bounce will happen. The first level where you could at least think about the taking short is 134, 134.05 area. But better to do this is an area around 135 level, because here you will be able to place the tightest stop if you would like to take the short. Here you will be you will have greater chances to get profit or to move your stop to the break-even, because market with a high probability will respect this level. If even it will continue move higher, let's suggest some currently very almost impossible things, but if even it will continue move higher, in this case probably some reaction will follow on this resistance, and you will be able to move your stop to the break-even and just watch what will happen. That's why this level is better to watch for possible and enter on the short side of the market. If you would like to take the short here, well, you could do this, but you will have to place stop somewhere above this level, and that will really not small distance. It's more than the 100 pips. So if your risk management could carry this, then okay, that you could do that. But this level seems more attractive from this perspective. Now, if you would like to take the long position, well, that's also could be done, because the foundation for that you have the foundation, you have patterns completed, you have the strong support, you have the oversold, so you may take some scalp long trade, but you should keep in mind that this will be just retracement. Do not marry this position, take the profit soon, so do not hold position too long. That will not be reversal, that will be just a bounce up, very small. And one thing that you need to get is just the pattern that will let you to take this position, and we briefly have spoken about it on Friday, and right now we have more signs of it. I'm speaking on the pattern that we have on the forward chart. Here we have the potential for the double repo buy. On Friday we have just frost and this crossing of the 3x3, and on Friday we said, well, currently guys, we do not know what will happen. Either we will get a brand body sale or we get the double repo or something of that sort. But right now we see that we could get the double repo buy. Why? By some reasons. First of all, market has matched all necessary conditions that we would like to get when we want to trade the double repo, except the last one, the confirmation of the double repo. So to get the confirmed double repo, we need to close above this green line. That is 3x3 moving average. Okay. When we will get it, the double repo will be completed, and we could start to trade it. The chances of this double repo to lead some retracements is really significant, because that is not just the double repo in somewhere. This double repo stands at the strong support area, the completion point of the ABCD. So when you have the double repo at the really rock hard support, the chances that it will work properly increases very significant. Well, so we need just the confirmation. Now, what necessary conditions market has met that we would like to get when we trade the double repo? First is this frost. Frost is perfect, so no questions. Second, first close above the 3x3, that has happened, and market hasn't quite reached, I have marked with this circle, hasn't quite reached the 3.8 resistance. That is the condition that is preferable when you trade the double repo pattern. Why? Because when the market hasn't quite reached the resistance, it means that all shorts that have been taken here are still stand inside of this margin, and market and participants, traders, haven't come to taking the profit with this retracement, because market hasn't quite reached the resistance. It means that all steam is still in the pot. Second, we have the close below the 3x3 and new bottom. This is really good sign for the double repo. Why? Because when the market forms new bottom, the breakout traders that enter the market when the market breaks previous extreme point, taking the shorts. Also, it's very good that we see this thrusting candle to the downside, because that indicates what I'm every time speaking about. That indicates the last assault of the bears that try to push market lower and to reestimate, to continue the bear trend. This is the last assault And when they fail, I speak about the normal double repo. If it will be confirmed, the market will turn right back up. And if they will fail, it will mean that those who entered on breakout of these lows have been trapped in the wrong position with the stops above the stop. Okay, that's how double repo works. And when the market turns to the upside, they trigger the stops and price accelerates to the upside. That's why the action by the double repo usually very fast. Well, and the final moment that I would like to talk about here is this stop grabber. So guys, as you can see, this red line is the MACD predictor. And you can see that we also have the bullish stop grabber that suggests the taking out of this stop. It's very significant. And what does it mean? It means that the chances of the confirmation of the double repo are really solid, because this stop is significantly higher than the 3x3, right? And if market will start to move higher, definitely will move above the 3x3 before taking target of the stop grabber. Anyway, combination of the double repo with the stop grabber at the bottom, it's very good. So chances really not bad that this pattern will work. In particular, this pattern probably will start, could trigger the retracement up that we would like to get on the daily chart. Of course, this pattern later could shift to some greater pattern, so that, as you can see, it's rather small, it's just an hourly chart. But when you deal with the daily patterns or even weekly confidence support, it's really possible that market will form something else. So maybe this will be double repo, market will start to move higher, reach the target of the double repo. Then market will turn to some retracement, some greater ABCD will be formed, or something else. As usual, this is the fractal development, so we could get something else. But the triggering point could become really this double repo. That is what we will be watching for on Monday.